Hi, today we are going to address Twitter and in particular analyst stock ratings. With regards to this company, I'm going to refer to several articles available on the web by major Wall Street firms where it is proven that analyst stock ratings on Twitter, it is a Ponzi scheme. We are going in first place to define what a Ponzi scheme is, and the best to define a Ponzi scheme is Bernie Madoff himself, who was sentenced 150 years in prison. And here you have an article of Business Insider explaining or describing how his scheme worked. We are going to read this sentence. Madoff used a so-called Ponzi scheme which lures investors in by guaranteeing unusually high returns. The name originated with Charles Ponzi. Well, when we refer to the articles and stock ratings on Twitter, we are going in first place to refer to this stock rating by a major Wall Street firm, JP Morgan, and this is from 2014, reiterated in 2015. At the top, Twitter, ahead of a crash, it is a buy, upgrading shares to unreasonable valuations. We are going to refer to other article on the web, this time around in 2015, April, ahead of a crash in Twitter, why Goldman Sachs expects strong Twitter earnings. Here you have a strong buy rating with a price target $63. My friends, facts are facts, and these upgrades were given precisely at the top, along with rumors that Google was going to acquire Twitter. Today you have a price in Twitter below $37. This is not the first time, it is a repetition of the history last year in 2014. And bear in mind that on Twitter IPO, I do remember that there were firms in Wall Street with price targets above $80 in Twitter, all right? And if you refer to our work at stockmarketlive.tv with regards to Twitter, you just have to visit the website, and here you have the different phases on Twitter. Twitter IPO, phase 1, the crash calling Twitter a bubble stock, phase 2 and phase 3 in Twitter. So we covered or discussed all the phases with regards to Twitter since IPO. And finally, I already had the opportunity to address Twitter and the fact that guests on CNBC, they continue misleading investors all over the world. Here you have on Wednesday, April 29, 2015, this individual, I don't see quite frankly the difference between this individual and Madoff, and here you just have to refer to the article. He has a very clear sentence that says basically that at these prices here at 41, 42, even Twitter makes sense. Going back to this article on Madoff, I repeat, I don't see, quite frankly, the difference between these individuals and Madoff himself. Because here you have the definition, I repeat, about what a Ponzi scheme here is, luring investors in by guaranteeing unusual high returns. So once Twitter reported earnings, and I'm going to refer to the chart, you knew that everyone was long the stock. And what is interesting is that after earnings announcement, all these firms, they didn't downgrade the stock. So today, all these firms, those following stock analyst ratings, including their customers, have losses which are unbelievable in size. This is the reason why so far Twitter, it has been unable, the share price, to make $1 gain while you have the markets I'm going to plot it here for you to visualize. You have the markets at new all-time highs in 2015. This is the chart in power shares, the Qs, and Twitter, it is basically the opposite. A Ponzi scheme given by analyst stock ratings. Today, obviously, it is not the same. Buying shares at this price compared to the buy ratings in Twitter at $50 plus. I have to say, before I terminate, there is a very good article, I believe that is from today, on Financial Times, Twitter out of character. And this article is quite good because it explains the valuation and makes a comparison between Twitter and Facebook. And it makes it says here, Twitter shares trade at 60 times forward earnings. And the article says basically what investors have to know. Twitter, to move higher, there are only a few options. Speculation, it is a speculative play compared to many other companies. Or eventually someone will be interested to acquire the company. Or Twitter, the management, solves the issue and starts monetizing the platform. So these are the three possibilities. Speculation is one of them that you see on CNBC, and today or yesterday there was other call to buy shares of Twitter just for speculative nature, because all those investment firms, they have millions of dollars in losses and they have to do something about it. The second reason, which is a potential buyout, is something that you are gambling whether it is going to occur or not. The third, which is the one that would be more plausible for a healthy comeback of the price of Twitter, it will be the management, instead of being unsuccessful, to finally prove something that they can monetize the platform. So it is rather simple. Rather simple in the sense of having these three possibilities. The third one, it is the one that would guarantee that the price effectively could go up to prices that will be interesting. But for this to happen, the management so far, it has not proven anything. Besides, the article on Financial Times is quite clear by saying that even at these prices, Twitter, the valuation is 60 times, here you have, is not my article, is Financial Times, Twitter shares trade at 60 times forward earnings. So, or the company does something quite fast, even if they do something to announce a good quarter, what is going to happen the next quarter, and the other one, and the other one. 60 times earnings, it is not a joke, right? So, this to say what? That even at this price, the current price, Twitter, is 60 times forward earnings. At $50 plus, when these companies were upgrading or raising targets, you have here the articles, not in our websites, the price to earnings forward, it was around 100 times or higher. Today, there are companies in the market, in fact, with higher valuations, but technically nice charts. And you know that these firms, they upgrade shares based on technicals and not on fundamentals. So, or projections that they are misleading. So, this individual here, he didn't apologize for his recommendation, which is unbelievable. No one downgraded Twitter, which is unbelievable. After earnings, no one came out, JP Morgan or Goldman Sachs, saying that they were reducing drastically their projections, or in fact telling the truth. And so I conclude by saying that these stock ratings, they fall in the category of a Ponzi scheme, which is in fact precisely the opposite. These firms, they had sell ratings, some of them, in this company because of political issues. I'm referring to, for example, Herbalife. And Herbalife today, after company reported earnings, no one upgraded Herbalife. I didn't see any upgrade by Wall Street firms, and today Herbalife, it is where it is, all right? So this proves what I've been saying. The only thing that you have to do to make millions of dollars in the stock market, it is to do precisely what all these firms, they claim that the stocks are going to do, all right? It's very simple. And if you want more, I can continue, for example, with this wonderful stock crash in Curie Green Mountain Coffee, the projection, the forecast that you find at stockmarketlive.tv. And I can continue giving examples every single day about these projections made by Wall Street firms. They confirm, all of them, that they are working towards a Ponzi scheme.